Good morning, everybody.
Hey, good morning. How you doing,
Here, let
Jess?
me put my audio up.
Good morning. Good morning. How are you doing?
Hey, David, how's it going? Glad to have you here. Welcome, everybody. Another Friday here. It's been a long week, but I'm happy to be here. We'll just give it a minute. Got a couple other people we're waiting for. Tammy, who's here.
How are we doing? Can you hear me okay, or do I need to adjust anything?
You sound good, David. Thanks for coming by. I hope you are not on the West Coast, and hopefully it's not 7 a.m. where you are.
No, I'm in Austin, Texas, so it's 9 a.m. Not too bad, but a little bit scrambling and running around this morning. A handful of meetings, but all is well. Are you on the East Coast? Where are you?
Yes, East Coast. I think most of us are East Coast here, but yeah, I know it's a struggle with some people that are up on the West Coast. But yeah, I'm having my coffee ready to go. Just let Tammy up. But yeah, it's good to be here. Just we're here for another episode of Crypto and Coffee. Dow and Tammy. Tammy, are you having issues connecting as co-host? Yeah, let me figure out what that's going on with that.
Yeah, do you need me to leave and come back?
No worries, we'll figure it out. And I do apologize. They're doing some work in my house today, so I hope you're not getting some of the background noise. But yeah, a lot going on this week in crypto and NFTs. But before we get into all of that, we do have CoinLedger here and David as well. We're going to talk a little bit about that touchy subject, right? That we all try to avoid, crypto taxes. I know personally, I'm like a procrastinator. I will wait till diamonds are built under pressure. Isn't that the saying?
Exactly.
Wait,
The longer you wait, the more pressure will build, and maybe you'll have a better tax return.
should that conversation be recorded, Jess?
Of course it should. Yeah, no, but yeah, I do my taxes. I just like waiting till the last minute. I feel like I work better under pressure. But yeah, I know even like me when I was first new into space, like I didn't understand crypto taxes. I don't think I still fully do. And I know it's such a new space and things are changing. So we're happy to have you guys here. We're happy to have you here, David, and the Coin Ledger team.
Yeah, well, I'm happy to be here, and hopefully, we can answer a bunch of questions, clear a lot of stuff up for folks because it can be, slightly confusing, complicated, but when it comes like nuts and bolts, it's actually not too bad to wrap your head around. So hopefully, it's just helpful for me and the team to kind of speak through, obviously the stuff that we work on every single day.
Yeah, yeah, we're happy to have you here. And I know also, the tricky part is that crypto is global, so it's definitely different all over the place. But yeah, we'll get into all of that. Let me just let a couple of people up that are trying to come up. But yeah, maybe give us a little bit of intro, a background about yourself, David. Like, I know you founded CoinLedger. What led you down this path?
hmm Yeah, so exactly right. So my name is David Kemmerer. So I was part of the founding team here at CoinLedger. I also have one of our folks who joined from our kind of corporate, you could say, Twitter account, but they're kind of just on mute. So I'll field questions. But so it started back in 2017, actually. It was when Bitcoin ran up to 20,000 for the first time, is when I got pretty interested into the space, and as everyone says, fell down the rabbit hole. I was pretty fascinated just with how fast the market was growing, how many people, were signing up for Coinbase accounts and, just getting into it. And essentially, myself and my two partners at the time started playing around and experimenting with building automated trading software back in 2017. And so we were arbitraging across various exchanges through building, software. There's now out of the box tech that does this for you, but back then there wasn't. But we were racking up like thousands and thousands of transactions with this software that we built. Um, and we quickly found out, we weren't aware, but every time we were trading one crypto asset for another, we're technically triggering a capital gains tax event that needs to be reported in USD, right? And none of this stuff is quoted in US dollars. And we had trades all over centralized exchanges like Binance and GDAX at the time. And so we had that problem. We didn't have a good way to actually calculate what our tax liability in US dollars was. And so that was really when the light bulb kind of was like, well, we should stop making trading software and we should build tax automation for all of these other people who have the exact same problem. And so that was how it kind of started. And we wanted to kind of build a TurboTax like experience for the world of crypto. It has evolved much, much more than that over the years. Now over 400,000 people leverage CoinLedger. Um, we've partnered up with large companies like TurboTax and Ledger and Voyager and a bunch more. So it's been quite the journey. I lead all of our go to market, so partnerships, SEO, paid media, content, kind of roll up to me those teams. But I like doing these calls. It's fun to chat with people, but hopefully that's a little bit of background and helpful for folks.
Yeah, that's great to hear. That's great to hear. We love to see like crypto native people building tools because they see an issue that they're experiencing and then they try to fix it. And I think those are the tools that really are beneficial in this space. Yeah, especially with like NFT trading, which we'll get into that too in a bit. But
Hmm.
yeah, tell us maybe a little bit about the products that you guys are offering at the moment for taxes.
Yeah, totally. So CoinLedger was built, right, just to be full tax automation and tax calculations for the world of crypto. So really what CoinLedger is it's a free product to sign up for. Anyone can sign up, and what you're going to do is just connect up your exchanges and your wallets. And what CoinLedger will do is it will read in all of that data from, the Ethereum blockchain from a Coinbase account, and it'll stitch it all together so that we can calculate all of those disposals and essentially your capital gains and your income in whatever your home fiat currency is, right? So that's kind of part of the issue. So, trying to calculate what your Ethereum was worth 2 years ago, hundreds of times can be difficult. And so CoinLedger will retrieve all of those historical prices,
How
feed
do
them
you
all
guys
in.
do that? Could you touch more upon that? That's really interesting. So are you guys doing using like some type of API price data or
Yeah, exactly. So, I mean, we use a lot of APIs. So it's a combination of a lot of things. We'll use the exchange's data directly if that's a possibility, but for some assets you can't do that. And so we'll use other historical pricing providers out there and kind of take what we've learned is the best prices and the best way to get those prices. And so it's actually many, many things to get the best prices and the most accurate prices.
interesting, interesting. Yeah, because knowing, like trying to calculate that, I know some people have done it like with spreadsheets and things like that. Like that is a
Hmm.
lot. So that's why I feel like there's not, people don't know about a lot of the tools that are out there. So they were like, this is too complicated. I'm just not going to do it. And we all know that's not the way to go. But you did mention something about Ethereum. Does CoinLedger pull data for other blockchains, or is this currently just on ETH right now?
Yeah, we support a whole bunch of blockchains. So, I mean, let me pull up the documentation, but we support Ethereum, Optimism, Arbitrum, Solana, Bitcoin, Phantom, a whole bunch more, and a lot more continuing to be rolled out. But if you go on our help center and you just search blockchains, an article will come up saying exactly what we support.
That's awesome. Yeah, I saw you guys really recently integrated with Phantom, so it's good
Hmm.
that I know a lot of people in this space use different blockchains. So just having all that information in one place, being able to get that data in one place is really helpful.
Totally.
And then, oh, go ahead.
Yeah, no, I agree. Other chains like Avalanche, BNB, Smart Chain, Polygon are also all supported. The next one we're tackling is Cardano for folks who need that. So that should be coming fairly soon. But our integrations team is constantly building more and more and more, right? Trying to be everywhere where a crypto user could be. Over time, it just gets more and more seamless as we roll out more integrations on that front.
Yeah, that's great to hear. One, I guess the next product that I read about that you guys have is the NFT tax software, and I think this is a big one because I know that I listen into some NFT spaces and people don't even know buying an NFT is a tradable event in the U.S. So what is so I think just having like an easy tool that will spell this out for people. But tell us a little bit more about this new product that you guys have.
Hmm. Yeah. So there might be a couple of things that would be helpful. One, it might be helpful to like briefly touch on like what triggers a taxable event in crypto. But first, I'll start with the NFT side. Yeah, about a year ago, we launched full support for NFTs. And so we integrate directly with protocols like OpenSea, Blur, um, what else? Looks rare, all of them. And so all you have to do is add your Ethereum public address that you're, you know, interacting with those protocols with. CoinLedger will then automatically read in that transaction history and go even further. It will automatically classify the various, swaps, um, trades on OpenSea, anything with the NFTs to actually build those into their taxable activities. So it's not like you're just staring at an Etherscan, portal of seeing the kind of the raw debits and credits. It's actually we're building the transactions in our UI for you. It just makes it way easier. But and then we'll spit out your tax forms that you need. Exactly like you mentioned. If you spent ETH to acquire an NFT, you actually disposed of Ethereum. That's a property disposal. You need to calculate what your gain or loss on that just Ethereum disposal was to report that on your taxes. And so CoinLedger will do that all automatically for you. And, it's really just a click of a button.
Which is awesome because I need to report all my NFT losses. I am not a great NFT trader, so definitely helpful. But yeah, let's touch a little bit, like you said, what are some of those triggerable events that people should know about um,
Hmm.
for taxable purposes?
Yeah, so this is where people get hung up and it can sound confusing, but it's actually pretty straightforward. So really anytime, well, first of all, the IRS, I know there may be folks from different countries on this call. Most countries are the exact same as how the US treats it, but the IRS treats crypto as a form of property, right? Other forms of property you may be familiar with is like real estate, stocks. And so anytime you dispose of property, you get rid of it, you sell it, you trade it, you're disposing of that asset and you realize either a gain or a loss, right? Depending on how the market value of that asset has fluctuated since you originally purchased it. So anytime you dispose of a crypto asset, you're triggering capital gain or capital loss that needs to get reported in the year that that disposal happened, right? So the simplistic example is, let's say I bought $100 of Ethereum and a few months later I sold that and it was worth $200, right? I would realize $100 of capital gain. And then depending on my personal income tax bracket, let's say I make $80,000, right? That will determine what percent of tax on that gain I pay. So maybe it's like 20%, right? Now, other forms of disposals, this is where people can get confused. It's not just selling for like fiat currency. It's just anytime you're disposing of that original asset. Like other dispose would be maybe I trade that Ethereum for an NFT, right? That is me disposing of the Ethereum and acquiring a new asset. I am realizing gain or loss depending on how that original Ethereum has fluctuated. And so that does need to get reported. Other things is like, what if I use the Ethereum to buy something, buy a good or service? Well, again, I'm disposing of that Ethereum and I'm receiving some service or some good, and that is a realizable gain or loss on that property. So anytime you're disposing of property, you are realizing gain or loss. Other taxable activity is like, let's say you're earning crypto in some fashion. Maybe you're earning it through staking, right? And you're just getting dripped out crypto rewards. Or maybe you're getting paid in crypto from a job, or maybe you're an influencer and you're getting paid in crypto. Anytime you're earning, that is also taxable, right? In the US and most developed countries, there's income tax. And so the way you calculate that is it's the fair market value of the crypto when you receive it, right? So if I'm staking my ETH and I get dripped out zero point 0.1 ETH, let's say on Monday, January 20th, well, whatever that zero point 0.1 ETH was worth at that time, that's how much income I've recognized, and that needs to be reported right on my taxes. So hopefully that's helpful. That's really broadly speaking how it works. There's of course a lot of nuance, but it's fairly simple when you kind of understand it from that lens.
Yeah, I think those are great. I'll let you go down right now. Those are great points. And again, this is just an overview of these items. Of course, always seek out your tax professional advisors
Right.
for help. Go ahead, Dal.
Yeah, that was a great explanation. And just for the sake that this thing is recorded, I lost all my crypto in the boating accident. So I'm just asking for educational purposes. But I really like the concept of, tax automation. From the description you mentioned, like it seems pretty comprehensive that a lot of things that we do in crypto are taxable events. Are there a range of transactions that are not taxable events? Can you touch on those?
Great question. Yes, because this is where a lot of folks also get a little bit confused. So things that aren't taxable is again, keep in mind that disposal context. If you haven't disposed of your assets, you likely aren't incurring a taxable event. So an example would be, let's say I buy Bitcoin from Coinbase and I transfer it to a self-custodied wallet, maybe like a ledger or something. T, right? That is me disposing of the Ethereum and acquiring a new asset. I am realizing gain or loss depending on how that original Ethereum has fluctuated. And so that does need to get reported. Other things is like, what if I use the Ethereum to buy something, buy a good or service? Well, again, I'm disposing of that Ethereum and I'm receiving some service or some good, and that is a realizable gain or loss on that property. So anytime you're disposing of property, you are realizing gain or loss. Other taxable activity is like, let's say you're earning crypto in some fashion. Maybe you're earning it through staking, right? And you're just getting dripped out crypto rewards. Or maybe you're getting paid in crypto from a job, or maybe you're an influencer and you're getting paid in crypto. Anytime you're earning, that is also taxable, right? In the US and most developed countries, there's income tax. And so the way you calculate that is it's the fair market value of the crypto when you receive it, right? So if I'm staking my ETH and I get dripped out zero point 0.1 ETH, let's say on Monday, January 20th, well, whatever that zero point 0.1 ETH was worth at that time, that's how much income I've recognized, and that needs to be reported right on my taxes. So hopefully that's helpful. That's really broadly speaking how it works. There's of course a lot of nuance, but it's fairly simple when you kind of understand it from that lens.
Yeah, I think those are great. I'll let you go down right now. Those are great points. And again, this is just an overview of these items. Of course, always seek out your tax professional advisors
Right.
for help. Go ahead, Dal.
Yeah, that was a great explanation. And just for the sake that this thing is recorded, I lost all my crypto in the boating accident. So I'm just asking for educational purposes. But I really like the concept of, tax automation. From the description you mentioned, like it seems pretty comprehensive that a lot of things that we do in crypto are taxable events. Are there a range of transactions that are not taxable events? Can you touch on those?
Great question. Yes, because this is where a lot of folks also get a little bit confused. So things that aren't taxable is again, keep in mind that disposal context. If you haven't disposed of your assets, you likely aren't incurring a taxable event. So an example would be, let's say I buy Bitcoin from Coinbase and I transfer it to a self-custodied wallet, maybe like a ledger or something. I haven't disposed of the asset, right? It's kind of like I moved money from one pocket to another, right? And so that's not taxable, right? You still are the owner of that property, and you're not going to realize any taxable activity. It's only when you sell, trade, spend that Bitcoin. What else? So yeah, buying and holding, right, is not taxable. In the US, gifting cryptocurrency up to a certain threshold isn't taxable. Um, contributing to things like IRA accounts, that's going to be provide like a tax deferred, right? But those are the big ones. The big one is that self-transfer. That's where some folks, there's some misinformation out there being like, oh, if you transfer it between wallets, you're triggering taxable events, and that's not true. If they're all wallets that you are the owner of, right? You're not like paying anything or like giving it to a friend, right? It's still you own it. You haven't disposed of it, and you haven't triggered a taxable event.
Cool, that makes sense. And my last question is around adoption, right? Because you mentioned NFT trading and retail trading, but I imagine a lot of institutions as well are reaching out to you. In the case of staking, right? Because I'm interested in LSD liquidity staking derivatives for ETH. I was wondering if you're seeing a pickup of interest from institutions still looking to make sure to do everything by the books, and from a tax and accounting point of view, they're actually doing things right.
Mm-hmm. Yeah, it's super interesting from our side. The first 2.5, 3 years of the business, the CeFi exchanges dominated where people were importing from, mostly into CoinLedger, which makes sense, right? From Coinbase and Binance and Gemini. But over the past year and a half, Ethereum has actually flippened the CeFi exchanges on CoinLedger. So now the most imported platform for CoinLedger, or from users on CoinLedger, is the Ethereum blockchain. And so this is on-chain activity. And that is definitely a testament in where real usage is happening. So it's pretty cool to see DeFi rails and on-chain really see adoption, and we see that firsthand. I can't speak right now exactly to like staking versus other types of transactions. I'd have to pull the data, but Ethereum is our most imported from platform.
Great question, Dal. Go ahead, Tammy, and then we'll circle to the rest of the hands. I'm guessing a lot of you guys haven't done your taxes. Everybody's requesting to come up. So go ahead, Tammy.
Hi, David. Thanks, Jess. Hi, David. I just have a quick question. I was cutting in and out and reconnecting, so I apologize if you've already answered this. But so when you actually use your crypto to purchase something, and that is then, let's say they transfer that into fiat. So when you're using it to purchase, when you use that word dispose of, that is taxable. So would that be taxable to you or to them, since they're the ones converting?
Now, let me ask a clarifying question. So you're saying you had a crypto asset, let's say, call it Ethereum or Bitcoin, let's say, and you used that to buy something. Is that what you're saying?
Correct. Right.
Correct.
Or to like at a business that accepts crypto.
Yep. So it will be taxable to you. So we can walk through an example. Let's say you bought one Bitcoin for simplicity purposes for $500, right? And let's say you use that one Bitcoin to buy a TV, which at the time costed $800. You would be realizing $300 of capital gain because you're disposing of that Bitcoin, that property, at a value of $800 where you acquired it for $500. And so you will report $300 of capital gains on your tax return. And the business owner right now, they possess one Bitcoin, right? So their basis, their cost basis in that Bitcoin is the fair market value that it was traded for, which was $800. And so let's say they hold on to that for a few years and they sell it for 10 grand. Right now, they've just realized capital gain of around $9,000. And so it all hinges on those disposals and what the market value of that property was at the time of disposal.
Perfect. Thank you. And if I could get Bitcoin at $500, I could load in bags. That's all I'm saying. But
sign me up. Where
do we get that? But thank you, David. I appreciate
you
that.
gotta go to coinledger.io to do that.
Those were the good old days, Bitcoin at $500. But let's go to the rest of the hands, and then we'll keep moving. Johnny, and then Daniel, and then Johnny, and then Nico, and then Daniel.
Hey, can you hear me all right?
Yeah, you sound good. Great. Welcome, Johnny.
Thanks for having me. David, great product. A few questions. So first of all, it's keeping track of assets you've held for more than a year. How is it calculating long-term versus short-term? Is it like first in, first out? Can you toggle that? What happens there? That's my first question.
Yep, great question. And so you're exactly right. So we support a number of different, costing methods as they're referred to. So FIFO, first in, first out; LIFO, last in, first out; HIFO, highest in, first out. For various countries like Canada, they're required to use adjusted cost basis. We offer that. And so that algorithm, which the user can select, is what's determining in what order, right, assets are getting sold off, which will determine long-term versus short-term.
Cool. And the as far as fees go, transaction fees, do you just treat that as any old taxable event? Are you tracking gas fees and things for people?
Yeah, so this is one of the really big strengths of CoinLedger, especially compared to a lot of competing products out there, is we built all of our DeFi, as we'll call it, or on-chain infrastructure in-house and from scratch. It took us a lot longer than some of other folks, but so by default, we track all fees associated with any transaction. So that's gas fees, that's protocol fees when interacting with various smart contracts. And so we actually have the ability to tie those to the transaction that they happened on. Now, not all fees can be quote unquote tax deductible because it's kind of dependent on the nature of the fee. Again, if you're just transferring crypto from one wallet you own to another, pretty gray area if that's going to be tax deductible. Our opinion would be likely not. But if you, incurred a fee on Uniswap to swap an asset, that's much more likely that that can be, either added to basis or subtracted from proceeds so that it is, in essence, tax deductible. And CoinLedger is handling all of that for you. And so, that's just a big perk of the way we built our, as we call it, on-chain infrastructure.
Awesome. Last question, if it's okay, Jess. I'm using
Yeah,
three.
go ahead, Johnny.
So the data for people that tap into your app, what are you doing with that data, and what's the KYC like? Do you do your own internal research on all the people that are coming in the door? Is that something that, obviously the IRS would be interested in that if everyone did get audited? What is your attitude towards the privacy and and what you're doing with that and what others could do with that data?
Yeah. So it's a great question. So we are not like a facilitator of transactions or a broker, right, in the space, which gives us a lot of advantages in that we do not need to KYC or know really any personal information about any of you, nor do I even want to, because we're just a tool to help people essentially calculate their income. And we're not filing people's taxes for them, right? Let's be clear about that. We're helping you build the reports that you need to then either take to your tax guy or import into something like TurboTax, right, that we're partners of. But we don't need to know your social security number or your address or anything like that. And so we don't have that data. We never ask for it. We're just a tool that you can use if you want. But the data that we do save, right, that we have to our, servers, which, we're on Google Cloud, is, all of your like trading history. Because again, we need that to calculate all of your gains, losses, and income. But we don't have much. We really just have your email address from like a personal identifying piece of information. Hopefully that's a little helpful. I'm happy to go deeper on what we have versus don't have, but we don't do any KYC because we don't have to.
Okay, thanks.
Totally.
All right, great questions, Johnny. Thanks. Go ahead, Daniel.
Nico was next, and then Wolf.
Nico,
and welcome, Matt.
No, Daniel had his hand up. But he probably put his hand down. Daniel, are you there?
Yeah, no, Johnny covered the two questions that I had about fees and KYC. So I'm good.
Great. Welcome, Daniel. Go ahead, Nico.
Good morning, guys. David, do you guys have an option for people? Because there's a lot of people in here and they're probably receiving crypto as payment. Do you have an option for people to have to like do like corporate stuff or no? Let's say there was an individual that decided to open up a corporation instead of directly receiving this, the crypto as payment. Do you have options like that?
So the platform is very much tailored towards retail, but a lot of folks who do stuff like that still use it to get their top line revenue calculated, right? Because those businesses still face that same issue of like, you know, if they're getting paid in crypto, that business still needs to calculate the fair market value of these assets at the time that they were being received. But like, we're not the software that's then also helping you like dial in your expenses and your balance sheet, right? We're not like QuickBooks in that sense. We're much more focused for the retail individual. So hopefully that answers your question. It still can be useful to those businesses, but it's not like cut out for them.
Great question. Thanks, Nico. Matt, what's up? Welcome.
What's up? What's up? What's up, everybody?
Good morning.
I'm still kind of out of it, but anyways, one thing that caught my attention about the crypto ledger and the taxes and the help paying it is, the backwards reporting. Sometimes people feel like they don't do, and I posted to the top. That you guys posted on your page. Most investors only report crypto if they have gains. A stunning 50% of non-taxpayers said the reason why they don't report is because they haven't made a profit on crypto. Unfortunately, this means many investors aren't reporting their crypto losses and thus are not claiming tax savings. This is 100% factual because it happened to me. So I was doing my taxes on TurboTax. I still haven't paid my taxes yet, but I was doing my taxes on TurboTax. And Coinbase pulls in my information. Robinhood pulls in my information. A couple of crypto software companies out there, they're hip to the electronic thing, so they're just pulling you the information that you got on taxes. And as I'm getting more and more data pulled in from my crypto investments that I had last year, what I owed in taxes was going down. I was like, oh, this is neat. And I was just doing it more and more and more. And so yeah, if there was ever a year, guys, to report your crypto losses, it would be this year. Okay, because 2022 was horrible. So if there was ever a time to report crypto taxes, I am telling you, please do it this year. Because yeah, you will save in what you owe in taxes. So I just wanted to point that out. And CoinLedger looks like a great product, and I knew it would get to this point. You know, at the beginning, everybody was so confused about what are we doing with taxes? Are we YOLOing taxes? But now I feel like things are getting more organized around, you know, reporting taxes.
Mm-hmm. Yeah, actually, thanks for bringing that up. I should hire you onto our marketing team. But that's a great thing that we hadn't touched on is, you know, all the losses that you've incurred over this past year are going to lower your total taxable income. So essentially, it's going to lower how much you owe the government. And so you're exactly right. People would be wise to take advantage of those losses that have been incurred, file those taxes, and you'll face a lower tax bill than if you just kind of ignored it.
Great. Thanks, Matt, for bringing that up. Yeah, Matt is great at finding those hidden points that need to be emphasized. So yeah, definitely reach out to Matt. Go ahead, Johnny.
Yeah, I have another question. It kind of goes back to last week as well. If people are pulling in transactions, let's say to the United States, that shouldn't have happened in the United States. Obviously, like thinking about like certain exchanges, certain airdrops. Do you have any intelligence around what jurisdictional rules there are around crypto when they actually go to write down something on their taxes that the IRS is like, what the hell? What do you mean you know, it'd be the equivalent of say like back in when marijuana was illegal, being like, yeah, I'm reporting $50,000 of green gains here. Like, do you have any interface that kind of sheds insight on that?
Mm-hmm. Yeah, so in the U.S., right, it's all about where you earned the income. So even if you're using, you know, platforms and you're VPNing into them, that still needs to be reported on your taxes. I wanted to bring one of my folks onto this call. He couldn't make it, but he could speak a little more in depth on this, and I'll just touch surface level on it. But like, again, it doesn't matter if you were using Binance or FTX International or KuCoin, that still needs to be pulled in. And it's not that those it's not that it's like illegal, right, for U.S. citizens. It's more that those businesses can't serve U.S. citizens, because then they'd face all this, essentially regulation that they'd have to comply with. So it's not as touchy of a subject as you make it out to be. CoinLedger supports all of those platforms, and if people are using those services, I encourage them to bring them into CoinLedger, account for that and report it. But I can also refer you to some of our folks if you want to go deeper on that question. Hopefully I did an okay job of answering.
No, that's good. And do you have I would imagine it would be, I think you mentioned maybe TurboTax, but do you have like in-house tax consultants or referrals?
Mm-hmm. Yeah. So it depends. So we, as a business, right, have folks in-house who are constantly working with us on, shaping the software in a way that it needs to be shaped. But also, if folks need to be referred to like a tax preparer or tax pro, maybe they have some very specific questions, we also have a network of individuals that we're happy to refer folks out to actually get tax advice.
Thanks.
Great. I'm not sure Matt, did you have a question? Sorry.
No, I was just gonna say go with TurboTax and save 15%.
You're repping for TurboTax. You crack me up.
Let's try to get
H&R
hired.
Block, yeah, right. We have a business, so we own a business, so we can't do certain things. But H&R Block does it for free too. Just saying. But I think I was having connection issues, so I think Wolf might be next. Dow, you may want to help me with this. Then possibly Daniel. I couldn't even see Daniel up here before, and Brad.
Yeah, hi, thanks very much, and thanks David for coming here and presenting the CoinLedger. All the best questions are answered already, but do you guys experience a spike in daily taxpayers over the year, or how many active users do you guys have on the CoinLedger?
From what I heard, it was just a question of user base. So we have over 400,000 people who leverage CoinLedger. All the other kind of active user stuff, metrics, we kind of keep internal, but that's the one we publicly state.
Great question. Hey Wolf, thanks for coming by and for asking the question. Yeah, it looks like hopefully we see that number rise. People need to do their crypto taxes. Like, this is not the place to come and try to do funny stuff. So
I'm telling y'all, this year y'all better do y'all crypto taxes. 2022 was horrible. Claim those losses.
Totally agree. Brad, good morning. What's up, Brad?
GM gang. Yeah, I had a question about some of the stuff as I'm working with my CPA on getting all this shit squared away. I mean, realistically, right? Like in a hypothetical situation here, is there any real distinguishing way to determine whether or not you received crypto into your wallet for services rendered versus a great gift from another random wallet address out there?
Hypothetically speaking, hard to say definitively. Of course, sometimes it's going to be very hard to tell. Sometimes maybe not as hard to tell. The government works with folks like TRM and Chainalysis on these exact problems, right? They're trying to associate really wallet addresses with known entities, known individuals, and they're getting fairly sophisticated at it. Now they're definitely not perfect, but with anything, it's a risk spectrum. So it's all about how much risk do you want to take.
Fair enough. Thanks, Steve.
Scout's honor.
Go ahead, Daniel.
Yeah, I got a couple follow-ups if there's still time. One is regarding taxes on fees. You mentioned that just similar to like when you report stock trading, the fees are reported within that document, which is great. I think we can all understand that, but paying fees, whether that be in Bitcoin, Ethereum, or whatever, the coin you're paying fees, that's actually a a disposition of your asset. So that in itself should be a taxable event too, correct?
Correct.
Yeah. So CoinLedger reports the gas fee payment not as a cost basis, but as a taxable event.
Exactly. If you're disposing of ETH to pay gas, that is a disposal of the capital asset. And so we will calculate that and bring that into your calculations as well.
Okay. So yeah, so it would be like a separate item, right?
Exactly. Yes.
Okay. Yeah, that's kind of odd, right? I mean that
It
I
is,
hope.
right. Because if you're paying fees in USD, that's not considered a property. And so you don't have to realize gain or loss on the USD. So it is unique. And we could spend an hour talking about just fees and how complex some of the counting has to be with them.
Mhm.
It's definitely a unique piece of the crypto space.
Yeah. Ideally it would be your exchange allowing you to pay with something else to,
Mm-hmm.
yeah, like a stable coin. So that
Well, it is nice. Some of them do essentially they're just taking the fee off of the asset you're essentially receiving. So then your proceeds are just slightly less, and then it's slightly different. But yes, you're right. And so good things to be aware of.
yeah. Second question is towards what Matt was making comments regarding your loss harvesting. There is a cap, right? I think it's like 3,200 per year, or so. So how does CoinLedger help the users roll up the losses? If you have more than $3,200 losses in 1 year, how does this CoinLedger help track that to the next year and the following year?
Your accountant has to do that, bro.
No, so great question. There are a lot of misnomers around this too. So like I want to try to clear this up. So you can offset an unlimited amount of gains in the same tax year. And so all of your trading activity, all of your losses will offset until you have what's known as a net capital loss. And that's what you're referring to, right? If you have more losses than gains during the year, then you'll have a net capital loss. And your amount of net capital loss that can deduct against what's known as ordinary income, which is like income you receive from a job, is like $3,000, like you mentioned. But it is important to note that there's not like a hard cap of like 3,000 of capital losses that you can take. It's actually dependent on, well, do you have other capital gains? Because those first offset each other. But the other piece of it is you still should take as much loss as you can, because those losses carry forward indefinitely into the future and you can keep using them in future years. So let's say I lost $50,000 in 2022, and this year I it's a net capital loss, so I don't have any other gains to offset that with, and so 3,000 will deduct against my ordinary income. But let's say next year I sell my house, let's say, and I realize a $50,000 capital gain. Well, all those crypto losses carry forward, and now those losses offset unlimitedly until they're completely used up against that capital gain. And so I've sold my house, and now my taxable income on that sale is almost zero because I've used all that carry forward loss. And so it's wise, again, to harvest losses and bring them forward in future years, because they'll always offset it against future gains.
Correct. And I guess the question is well, maybe CoinLedger is not the tool to track that, but how does that work? Like, I don't think TurboTax has ever asked me, hey, do you want to carry the losses from
Yes, it
whatever,
does.
you
Yes, it does.
it
Yeah,
does, huh?
but Daniel,
Yeah,
it gets a little
it does.
complicated. This is where you need a CPA for stuff like this, bro. Because, like, if you have a house and you're claiming losses on whatever, let's say you had a big loss on the house, right? Like you didn't sell, but something else happened, or you had a loss in the stock market. Like, then you're gonna have to KYC yourself into this, and for them to do your taxes, pretty much. Like, I would rather go to a CPA than deal with software to do all of this. It gets very complicated when, like, even let's just say, for argument's sake, you sold a collectible that you like for $50,000, but you bought it for 40 and you had a 10,000. Like, it's a lot of things, bro. Like a physical collectible, what I'm talking about. So yeah.
Guys, I'm getting some background noise. If you can mute, please mute yourself if you're not speaking. And we are coming up at the top of the hour, and I do want to be respectful of David's time. I did, and thank you. Sorry, David. I know they could keep you here all day trying to get their tax questions answered, which it looks like nobody has done their taxes yet. But I guess maybe like to sum it up, maybe just a kind of like a general question. Obviously, I see you guys have education for different countries. Like, how do you keep up with all the new laws and or regulations regarding taxes for the different countries? And are you seeing anything positive in the space as far as like tax laws and things like that?
Mm-hmm. Yeah, so we work with, you know, a fairly large number of, tax advisors in those countries to kind of keep us abreast to these types of things. In terms of what changes are we seeing, frankly, not a lot of like what I would call positive changes. It's more on the enforcement side, like, the IRS thinking through, okay, they believe there's this tax gap of people in crypto, particularly who aren't, reporting their income. How do we build better enforcement rails to, understand and encourage those people to file? That's what we're seeing a lot of, right? That's what you see with the whole 1099, drama that's been going on over the past year, and the definition of a broker. That's what we see a lot of. But there's been some updated stuff by the IRS, but it's pretty minor stuff. The meat and potatoes of it has been kind of decided back in 2014 actually by the IRS. And so I'd say the IRS is a little more ahead of the curve on crypto than like other agencies like the SEC. But that's some of what we see and how we do things.
That's awesome. And anything else that you might want to leave us with? Anything new that CoinLedger is working on? Just for everybody, I did pin some of their tweets to the top. Make sure to check them out. But anything you want to leave us with, David?
And we're always working on a lot of stuff. So a product that is being developed is just more real-time free portfolio tracking features. So CoinLedger is really, really good at doing your taxes and helping you calculate all of your income right now. And in the future, we want to be a platform that you're using more daily, weekly to just monitor your portfolio, monitor the crypto space. And so that's being developed right now. But it's completely free to sign up. You can try it out, test things, import your stuff, check out how all the calculations work. And you never have to pull out your credit card unless you actually want to like download our tax forms. So it's really try before you buy. And I'd encourage everyone just to check it out completely for free.
Yeah, we appreciate it. Matt, I'll let you go really quick. I see you have your hand up.
Yeah, no, I was just gonna say thanks for the information. I was gonna tell everybody, if you guys want to keep up to date on tax laws and education, there's a front of the website called irs.com or irs.gov, and they will tell you literally about every change that they are doing every year.
Mm-hmm.
I'll make sure to add that to my reading list for this weekend, Matt. And no, David and the CoinLedger team, like, we really appreciate you guys being here. I know everybody's busy, so thanks for taking the time out. Make sure to check out their product. Again, nothing said here was tax advice or financial advice, so always check with your tax professionals.